Everyone. Good afternoon, everyone. I have some problem with my camera, so I'm not being able to switch on the camera. Uh, please, please excuse me for that. Yeah, because you wanted to say something, please.
No, just wanted to add up. So first of all, thank you, Rohan, for all the belief in us. So Rohan has been the very first adapter, not one of the first, but the very first to hop on Invest as a platform, and it has been a beautiful journey of co-growth and coexistence. He only proposed. So while in our journey of 3.5 years, we found a circle has done 200 investment, close to 150 unique companies, a network of 12,000 people. We continue to leverage new startups, and that's where Ron and team has been phenomenal. So Ron, thanks for that. He only proposed that as we found a circle is bringing its VC fund, which is one of the earliest VC fund buyer angel platform within 3 years of incubation. So just a very brief background, it's a 60 million VC fund that Gaurav will be detailing more, where the first closure is due anytime in March. Ron suggested why not leverage the best and best of investors who might be looking at a different set of asset class, just beyond angel investment. So here we are with the curated set of people for this. Guys, thank you so much for being available on a Sunday morning. While we brief here, we'll suggest you keep parking your questions on the Q&A section, and we possibly take them immediately after the call. Rohan, I hope that works.
Yes, that would be great because
Yeah. So Gaurav, over to you for the presentation.
Thank you, Vikas. Thank you, Rohan. And thank you everybody for coming the Sunday afternoon. So before I wanted to just tell you about Avinya, because Avinya is basically somebody has, I think, switched on his mic.
can we mute all participants
Yeah.
as the host? That will be great because there's an option for that to the host.
So, friends, the Avinya is basically an Sanskrit word. Avinya means innovation, and we kept the name keeping in mind that we want to support innovations. That's the reason. Uh, Rohan or Divya, please make sure that every attendee is mute.
I don't have the host access, Gaurav, so whoever is the host only
Yes,
can do
I've
it.
done it. I've done.
Okay, thanks, Divya.
And, can you give Rohan also a host access? Yeah. So, friends, what we did just before that, I was just wanted to tell you about my journey. I'm a chartered accountant qualified in 98, and for about good 20 years, I was doing a practice. And from almost about 2015, I become active in the angel investing. And from 15 to almost about 18, 19, I was actively investing in angel all the startups and everything. 2018, I become a general partner to a fund, and for 2 years, I raised capital for them. I set up the entire strategy for them. And in 2020, myself and my co-founder Neeraj, and other co-founders started, V Founder Circle. And there, we started with an angel network, which is now almost about, as Rohan was telling, that from last 2 years, 22 and 23, both the years, calendar years, we are number one in the India in terms of deals, in terms of number of angels. We have now close to almost about 13,000 angel investors coming from close to 700 cities of the world, which is coming from 59 countries. So that's the kind of thing which we have. This is V Founder Circle. And then after We Founded Circle, what we did, we brought in our accelerator program, which is called EvolveX. And from there, we have started writing checks for a fixed equity, and and started mentoring and curating and handholding those startups, because we wanted to enter in this entire game very early on, and we wanted to pick up best of the companies, best of the startups at the very early on. When we set up our angel network, when we set up our accelerator program, then we thought that we should have a technological platform to facilitate this, because all across world, if we have to reach, and if all across world we have to deliver the angel investing, then we need to have a tech platform. And fortunately, we are the only one tech platform in India, which is called invest.com. When we were planning for invest.com and we were doing all that, we realized that we should be completely compliant, and we should take the multiple fund licenses to make sure that whatever we do in the space should be completely compliant. There we took two angel fund licenses. One is called Invest Trust, which is a SEBI approved fund. Right now there are almost about 1300 LPs there. And then second, we were the first one to go in the gift city and raise and start WFC Global Angel Fund. And with those two funds, angel funds, we started our technology platform. So first was the angel network, second was an accelerator program, then technology, and then two angel funds. Friends, after doing all of that, because we were building blocks, we were making sure that all things are going perfectly fine, and then we come with our VC fund, which is called Avinya Ventures. And because in the entire multi-stage funding, we wanted to be sure that we wanted to help or support startup founders at a multiple level. So we created that. So this slide talks about the ecosystem which we have built. We are at multi-stage. We have an accelerator program. We have everything, what you need for investing in a startup as a startup funding. And fortunately, friends, we did develop this entire ecosystem with two philosophies, digital and physical. So we have went to almost about, along with my co-founders, Vikas, Neeraj, everybody, we traveled to more than 65 cities of India. There we did the events. And we have created an awareness about angel investing. Morning we were doing startup masterclass, and in the evening we were doing startup investing masterclass for the investors. That's what we were doing. So this is just about us. We have invested in more than next. So this is about us. In 2022, we invested in 71 investments we made, and we were number one. In 2023, also we invested in 103 deals, and we become number one in both the years. And these are the companies. One of the very good companies, if you can see, Blue Smart, Zip, and multiple companies, YPay, Glamu Health, and other, lot of such companies have been invested by us, Bank Sati, and other. And this is, what I was talking about, that how we discovered this entire ecosystem. Not only we focused on Delhi, Bombay, Bangalore, but we focused on the tier 2, tier 3, tier 4 of India, along with the global geographical capitals, startup capitals like Singapore, London, and Dubai. We were there also. And we did investors meet, startup mixers, founder backing, founder events. Fortunately, we have up till now got almost about 12,000, more than 12,000 startups we have evaluated. And out of that, we have invested in 125 companies as a V Founder Circle EvolveX. Fortunately, 55 of our companies have got an up round, which is almost close to 40%, which is a great number. And after investing in almost about 80 companies, eventually we realized that when we reflected on our portfolio, we found that almost 25% of our founders are female founders. That's also, I think, in the startup ecosystem or in the fund thing, it's also quite high. And we are quite happy that our merit of curating the deals were such that we could found out some exceptional female founders. And 80% of almost about 80 plus deals out of 125, almost about 65-70% deals are early stage deals, very seed stage deal, where the valuation is between 10 to 15, 20 crores. And that's what is our moat. We have identified that in last almost about 7-8 years of investing, we can identify companies at a very early on. Next. So this is an impact sector. So we take clean tech, healthcare, agri-tech, edu-tech, and fintech in the impact sector, and their MOIC money of invested capital, invested capital is multiplier of invested capital is almost about 4x. This is what is our portfolio. So if we have invested at 1,000 crore valuation, the total put together valuation today is a 4,000 crore. That's what we wanted to say. Next. And then we have another sectors. So all the other companies, all the other sectors come here. So we have invested in more than 13-14 sectors: robotic, drone, consumer, content, gaming, B2B SaaS, web, and other things, Web3 and other. There the MOIC is 2.5x. So that's what is there. It's almost about a report card of a last 3 years. And now we want to take a next leap, which I was talking about, which is Avinya. Avinya is basically a VC fund. It is 250 crore plus 250 crore fund, which is in dollar terms almost about $60 million. And we started this fund 15th of June. Fortunately, we got a very good response for this fund. From this fund, we are going to be making 100 investments and wanted to identify 25 winners. And when I say winners, I mean any company which will give me 3x is a winner for me. Any company which gives a 30x for me is a mega winner for us. That's what we want to do. And out of this fund, we wanted to invest in almost about 10 sectors. So, friends, this is our investment strategy. We will be investing very early on, almost about 50 lakh to 70 lakh rupees, which is almost about $100,000 in 100 companies, just to identify companies at a very early stage. And fortunately, when you have an accelerator program like EvolveX, your entire deal flow increases like anything. So fortunately, we have that kind of a thing. And after the stage 2, which is basically 40 companies, so 20 companies will be migrating from 100 companies, and balanced 20 companies will be coming from the outside of the universe where we have missed it, or some companies where we have seen. We are monitoring them from last almost 4, 5, 6 months, and we identified that yes, the founders are doing good, and we can write the check. And here we would like to write almost about 500,000, which is 4 crore in terms of 3 to 4 crore rupees. So 20 companies will be almost about 20% of the seed will migrate to this level, and 20 fresh capital will come. And if you see the right hand side to the screen, we have taken a fund deployment strategy, which is how we are going to be doing. At the level 1, we are just putting 10%, which makes it which is the most risky bet, or where we are writing more number of checks, we are allocating the least capital. And second stage, which is 28%, 14%, because 20 companies will be migrating from stage 1 to stage 2, and 14 will be fresh companies. 20 companies will be fresh companies, so 14% is a fresh capital. So in this entire strategy, we have 24% allocated, 10% of the first stage and 14% of the second stage for a fresh capital. Rest entire 76% is a follow-on round or a visible capital. That's how we created the strategy. Then stage 3, almost about 20 companies out of 120 companies put together, seed and pre-seed A level. And then series B will always have 10 companies out of those 20 companies and 4 companies. The idea of this entirely is to make sure that we back our winners and we eliminate those who are not doing good, and we do not dilute. Next, number 2 is we do not dilute where our winning is coming. So supposingly we have invested in some company at a 10 crore and that company becomes 1000 crore, and we took 5% at the initial level, and eventually the company has grown and we become 2%. That will not be an absolute winning. So we wanted to protect our equity also. We want to just protect our dilution also. And then third, and the most important thing, friends, you all understand that the visibility of a capital is one of the most important thing for a founder. And here we are giving them the visibility of 5 stages. So we wanted to say all the founders that if you are doing good, every stage will be supporting you. Every stage will be helping you. Maybe the first level of the check will be only our check, solely our check, but at the level 2, 3, 4, 5 will be writing co-investing with other investors also. There may be a possibility at a level 5 that the company is raising almost about 300, 400 crore or 500 crore, and we are writing 20 crores to 25 crores in that. That's the kind of confidence we wanted to give our founders. Friends, the timeline for this is, we'll be taking capital anytime in April, and from April of 2024 will be a 20% capital will be drawn, and then next year, April 2025, 30%. And in next year, 2026, April will be 20%, and 27 will be 30%. So it's a 20, 30, 20, 30. So supposingly, any one of you have committed 1 crore rupees, so 20 lakh, 30 lakh, 20 lakh, 30 lakh. So practically speaking, in next 36 to 40 months, we'll be taking the entire capital from you, and we'll deploy this money in 48 months, and we'll start taking back the money from the investment is 45 months and till 84 months. So practically speaking, this is graph is showing completely that we'll take the money in 36 to 40 months, we'll deploy in 48 months, and from 45 months to 45 months to 84 months, we'll completely exit all our startups. That's what is the strategy. Next. When I was saying that we will write 100 checks, that does not mean that we have a strategy of writing large number of checks and not going for a very deep level of curation. we are very sure that we wanted to have a very deep level of curation. So supposingly we wanted to invest in 100 companies, we have to pass through 10,000 companies. And that's the progress report right now also. Almost about 12,000 companies we have passed through, and we have invested in 125 companies. So 1% is our ratio. So we will be identifying 1,000 companies, out of which almost 20 companies will be coming for 200 companies will be coming for a preliminary evaluation, and then 100 companies will be coming for a due diligence, and 20 companies will go to investment committee, and out of which 10 investment will be done, which is 1%. So what we wanted to say that it's a smart curation, it's a wide deal funnel, and a deep evaluation process. So we wanted to have that more number of companies, and and then from them, identifying right companies. Some of you must have heard that the success ratio in startup is not very high. Certainly it is not high for the companies which are not curated, but it is quite high in the case of curated companies. I myself have invested in 120 companies up till now, close to 120 companies. And friends, my ratio is close to 50% and above in terms of success. I have got almost about 17 exits up till now. So this is the sources for us. We are getting sources of deals from 5 channels. Number one channel is our founders. So fortunately, when we have 125 companies invested out of WFC, and in my portfolio also, in my co-founder Neeraj's portfolio also, there are another 50 companies which are not WFC's companies, where we invested much before WFC took birth. So we have a founders, and they are continuously recommending and referring us the deals. Number one. Number two, investors like you. Fortunately, we have pool of 13,000 investors, and few of the people are very actively writing checks with us, and they are very eminent ecosystem players, and they are getting quite good marquee deals. Those deals come to us. Number three is our outreach program, which I told you that we go to cities across India, and there we meet startup founders, and we identify. Out of this journey, we got almost about 4 or 5 such startups where we have invested, just because we went to some city in Bilaspur or in Raipur or in Indore, and we've identified that founder. The fourth is basically we have a partnerships and tie-ups across India with IIT, IIMs, and such premium institutions where we get the direct deals. And fifth is, we get deals from the social media. A lot of people reach out to me, Neeraj, Vikas, and our other co-founders, for investing their company. And though the success ratio in that is very less, but yes, certainly we get some exceptional good companies in that also. Next. Friends, when I talked about the strategy and then how we are going to be curating deals, the more important is investment thesis, on what we will write the check. So we are very clear that we wanted to have a founder market fit. That means that first we will be checking, because in early stage investing, everything is founder. So in last 8 or 9 years of my experience, I found out that there are 4 important elements which makes a founder a perfect investable founder, which is knowledge, experience, passion, and attitude. And interjunction of all of 4 makes it a powerful founder. So, and if any of these 4 things are missing, we may not invest in them. Then comes the market. Whatever great company you are building, but if it is not for the people, in India above 5 million, so your overall market size can be more than 50 million, which is 5 crores in India. We may not be the company which we wanted to invest. When I'm talking of market, it is a complete market size I'm talking about. I'm not talking of the customers or users of that. They may eventually end up only be 10% of that particular user sector, or 5%, 10%. That's all okay. And friends, we as a founder circle and Avinya, we are active investors. We are not a passive investor where we just try to find as our financial capital, write a check and just don't do that. We are somebody who actively help our founders, by way of mentoring, by way of global community access. Wherever we go in across India or abroad, we take our founders along with us. We wanted to create a collaboration among them. We help them by each other's, core skills and strength. And we, by the credits, we help them by the Amazon credit and other credits and everything. So these are certain things. And friends, we will be an impact investing. We'll be not investing in tobacco, non-wages, and anything which is an unethical or which is not environment friendly. So we'll not be investing. We'll be taking care of ESG completely in this fund. And we wanted to, as a fund manager, I wanted to commit that 2% of the profit of this entity will go back to early stage startup founders as a grant. That's a commitment at the first stage. Who are the people? So I am myself Gaurav VK Singhvi. I'm the co-founder. I'm a chartered accountant and an entrepreneur from last almost 22 years. Very active in this entire ecosystem. Invested in more than 120 companies. And apart from that, I'm associated with multiple associations and multiple organizations. Built a lot of businesses, sold businesses. That's what I have done. And as a skin in the game, myself has also been part of the general partner of a fund, and apart from that, investing in startups from last almost about 8-9 years. Neeraj Tyagi, my co-founder, he's a very well-known name in startup circle. He sits in Bangalore, and the entire deal curation is taken care by Neeraj. He takes care of that. And from last almost about 8-10 years, we are very close friends and working and building this company together. Bhavna Bhatnagar, she was earlier in Bike Dance in Beijing, and she was the co-director at a startup grind. From the day one with the company inception of this company, we found a circle. She's with us, and she is somebody who takes care of our EvolveX program. She's doing that. Saurabh Dev, he's again an IIM Lucknow pass out, and apart from that, an engineer. And he earlier he was part of an Infosys CSC, but after that he created his own sports tech startup, and right now he's taking care of the investors for us. So all the 13,000 investors are normally taken care of by Saurabh. Vikas joined us on 1st of January 2022, and he's somebody who was earlier the national sales head for India Mart. In 22 years, he was in leadership capability of that, and almost about 5,000 to 6,000 people were reporting him when he left his job and joined this for entrepreneurship. And he's somebody who's taking care of entire technology, entire syndicate, all deals and other things. So he's somebody who's taking care of this entire technology and relationships, partnerships, and other things. So all the 5 people take care of different things. I individually take care of funds, compliances, and related issues. Friends, this is our portfolio. There are few companies which are exceptionally good. BharatPe was my portfolio. I invested at a 18 crore valuation and exited at 7,200 crore valuation. Then Zip, Liquid Loans, Router, Putloot, O2O, and other, these are all companies where we have invested, almost about 30 exits altogether, all founders. And all founders, all Neeraj, me, Vikas, we have invested in more than 200 startups up till now. Fortunately, we have got a very diverse sector, which is 20 such sectors we have invested. And fortunately, myself, Neeraj, Vikas, we are mentoring close to, up till now in our journey of 8 years, we have mentored 50 startups up till now. So friends, this is our team. Manish Rathi is vice president, and again, Rohit is also vice president. And these are a few other bright people, those who are working with us, Komal, Divya, Raghav, and other. And this is a fun team, though the We Founder Circle has a large team of almost about 45, 46 people, but fund runs with a very lean team, and fund has all 9 people team apart from me. So that's how we are operating in this fund. And all people come from a very relevant and very powerful background, like an Avinya, ICICI, Lombard, Bank of Baroda, Axis Bank, and other things. So those kind of background they come from. Next. Friends, here I wanted to talk to you about the VC returns, and how the asset classes play among all the 4 asset classes. So in investing, there are primarily 4 asset classes. One is Nifty, which is equity, mutual funds and everything comes in one basket, and then gold, real estate, and VC. So across all the time zones, 3 years, 5 years, 10 years, you can very well see that VC returns outperformed all the other 3 asset classes. This is the situation scenario presently. Certainly, equity markets are doing very good. But when you look at the and a tenure of 5 to 7 years, I can assure you that early stage investing or VC investing is going to be giving much better return in the position where India is today. And these are the returns which we are some previous funds which they have given the exits, and this is the kind of an IRR they have given to investors. we are also thinking of, we are also planning and doing an homework to keep ourselves aligned to the similar kind of an IRR. When I say 48% IRR, that means that if you have given me 100 rupees, that has become 1,000 rupees. And if I say 25% of IRR, then means the money which is given 100 rupees become 400 rupees. And when I'm talking of IRR, it is an investor level IRR, not the money which is kept by the fund in the carry, fund manager as a carry. And just to give you an example, we are giving you 6 companies example where these are the companies, those who have given 2x return of the entire fund. So that means supposingly a fund has invested in 50 companies or 100 companies, only one company has given a return. Supposing the fund is of 100 crore, 200 crore rupees is given by just one company. And friends, every fund gets one outlier or one such company in their portfolio. If you are in the game, and fortunately, when I have given the 6 example, all of these 6 companies belong to a different fund. So it's not that one fund has unlocked some secret sauce. It is basically, if you are systematically investing and you are available in this ecosystem, you will get your ultra winner, and that's what you want to show. Next, friends, there are 4 important or things when you wanted to invest. Number, how I get the access to a deal. Number 1. Number 2, how much capital allocate, which is number 2. Number 3, how will I keep a track of my investments? And number 4 is how exit. Friends, all of these 4 problems is solved by VC. We identify deals for you. Supposedly last year we have invested 150 deals. Somebody will say, how will I identify that which 10 companies should be there? So you don't have to bother. VC fund take care of that. Number 2 is, should I write 2 lakh rupees or 5 lakh rupees, or I should write 50 lakh rupees? That also is being taken care. And in our pyramid philosophy, we get an opportunity to write a check at every stage. That, as an angel investor, people don't get that kind of an opportunity at every stage. But as a VC, we get the strategy. I just wanted to give you an example. You have written 2 checks, one of 10 lakh rupees, another of 50 lakh rupees. 10 lakh company become 4x, and you got 40 lakh rupees, and the 50 lakh company died. So actually you invested 60 lakh rupees and you got back 40 lakh rupees. The decision was not wrong. In startup, if you get a 50% success, a very high success. But unfortunately, the allocation of capital was poor. It was not right. That's why the absolute winning did not took place, or rather it was a loss. We are wanted to take care of that entire thing by allocation of capital. And as we are a SEBI fund, every 3 months we'll be giving you a report that which companies we have identified, where we have written what is the development of that company, what the kind of future we are looking at that. It's a mandate from SEBI that we have to give every 3 months a quarterly report to all the investors. And 4th, it is a mandate for the fund to exit all the companies and return investors with IRR. Fund manager can take single penny only after he returns back the money to the LPs, limited partners. So these are the 4 ways we are seeing our companies to be exiting. Number 1 is a secondary. Friends, I'm quite happy to tell you that almost about in 2022, $11 billion of buyouts have happened. 2023 also similar number. These are buyouts have happened. And just to tell you, in India, this trend is increasing, that people wanted to now invest in companies, those who are unlisted or early stage. We must have all heard about Tata Technology or NSC and something. And same kind of trend is happening in the early stage investing also. And M&A. So friends, in India, there are almost about 300 large companies like Reliance, Adani, ITC, Marico and other, which are continuously buying out the companies. And if I just take an example of 300 companies, and yearly, if they buy one company also, every year there will be transactions of 300 to 500 transactions happen. And in a span of 7 years, which is my fund tenure, almost about 2,000 to 3,000 such deals will happen. So we wanted to be part of that. Fortunately, in my own portfolio, 4 companies I've got where M&A has happened. Find one of my founder invested startup got acquired by Reliance Industries Limited. Innovate got acquired by Oyo Rooms. Super Delhi got acquired by Swiggy, and and Beardo got acquired by Marico. So these were the 4 companies where in my own journey I've seen that has happened. So we are quite excited about that also. And IPO, certainly friends, in last almost about 2-3 years we have seen companies coming IPO. Though because we are a very early stage fund, I don't see that our companies may be going for an IPO, but certainly in our portfolio after 6 to 7 years, there'll be few companies, those who can come in next 2 to 3 years or 5 years IPO. So those will be a very easy exit for us. Any fund or any great company would like to take up those companies from our portfolio. And friends, every quarter we are seeing that one new company is becoming profitable. This number, which is 25 today, was 8 almost about 15-16 months before, and now it is 25 companies that become profitable, because all the founders have identified that now they have to make a profitable company, because if you wanted to see a market, or you wanted to go in a primary market, or you wanted to list yourself, the only thing which is going to be winning there is a profitable company. So these are some. And friends, why somebody should choose us? We are a community focused VC. We are somebody who wants very hands-on and wanted to take everybody, and we have built a very large community across India and abroad also, and that gives us a strength. Number one is identifying great deals. Number two, helping founders to go to those geography in terms of business, in terms of collaboration, in terms of third-party manufacturing, in terms of warehousing, in terms of distribution. That's the kind of power we have. And apart from that, I wanted to say that we are somebody who's not basically providing only financial capital. We are somebody who provides ecosystem capital and network capital also. So Avinya is a bundle of all the 3: financial capital, network capital, and ecosystem capital. And as we talk about the strategy, I told you that 24% capital will go to fresh companies or newer companies, and 76% great skin in the game. Differential early stage, and I told that we are somebody who's known for our early stage investing. Founder market fit, I told you about the strategy where we will be investing, and the exit strategy. Right now we are raising capital, but at the same time we have started working in the space of exits also. We have started creating our relationships and funnel, that in 3 years, 5 years, 7 years, whenever, how can we exit our companies, and what those companies, supposedly Reliance is buying companies in sector, what they are seeing, what are their parameters of buying a new company, buying a company. So we are taking those kind of intelligence also with us, so that we can in future we can take care of that. So this is the reason somebody should invest with us. Friends, this is the key term for the fund. The fund is of 7 years. +1 is just an exigency situation like COVID. So supposedly COVID comes and then you want to take a 1 year of extension. So that's why SEBI has done it 7, but this fund is of 7 years, for the all practical purposes. Commitment is 36 months. So if we will start from April, in next 36 months, we will take the money from all of the people. The fund is of 250 crores and 250 crores green shoe. So practically 500 crore fund. And early stage sponsor contribution is 5%, where myself and my co-founders is investing as almost about 5% of this. The model of this is 220. The fund minimum, because it's a SEBI requirement that the AIF you have to invest 1 crore rupees. That's there, and 220 is the model. We have a hurdle rate of 12%. That's a very interesting thing to tell you. Supposedly, if you have given me 100 rupees till 221 rupees compounded 12%, simple interest, 12% is 84 rupees in 7 years, but by compounding it is 121 rupees. So till then, if you have given me 100 rupees and by way of compounding 12%, 221 rupees, then only as a fund manager I can get anything. So that's what we are giving. That till then, fund manager will not get anything, or fund will the sponsors of the fund will not get it. So this is the thing. If you have any questions, anything, please do ask. Rohan, if you can moderate and can take up the questions, I'm happy to reply.
Yeah, sure. Cool. Thanks everyone thanks Gaurav, first of all, for the wonderful presentation. Does seem like a marquee investment opportunity. So yeah, we are open for questions. You can either ask in chat, or if you want to ask directly, raise your hand. We'll allow you to unmute and also clarify your questions. So Babu has raised his hand. Babu, allowing you to unmute.
Hey, thanks for the presentation. So, how do I get to track the investments that I've made? And, is that you talked about like a 3-month report or something, right? So, how do I get to track this?
So, Babu, we will be providing you an every quarter report, which will be a very detailed report, which will provide that what all companies we have primarily scrutinized, what was the reason of investing, the companies which we have invested in earlier quarters, how are they performing, what is the stage, if they have raised any next level of capital or next stage of capital, that will also be. So it's a very, very detailed, comprehensive report, which you'll be getting every quarter.
Okay, great, thanks. And one follow-up question. So I know that there's this crazy wave of AI that's kind of going on right now, which is reflecting everywhere. Like, how are you capitalizing that today?
No, so we are in a stage of evaluating such deals. So just to be a little more careful, we have before 1 year there was something a lot been talked about Web3. And we have put up our 2 people to identify for 6 months to identify some great deals in Web3. Eventually, we could not identify any great deal in that, and we just invested in CoinX, which was not a Web3 deal, but crypto text computation, company. So when I'm saying this, we are equally mindful that sometimes what happened that when a wave is going on and some sector is very hot, you sometimes wrongly, because of the FOMO, you invest in a wrong company. Like the same has happened in the pandemic time in 2020-21. Everybody was talking about edutech startups, and people left, right, center invested in edutech companies, and they thought that people will never, or students will never go to a school ever. There will be nothing like a physical world. But eventually, everything changed. So, just to reply your question, we are evaluating deals. There are some great deals available to us, but equally we are quite careful in writing checks before something really great is being seen.
Great. One final question, if I may.
Yeah, please.
So you talked about a 45-month window and a 48-month window, and then exiting all the positions towards the end, right? I wasn't very clear.
I will run it. Yeah, that's a great question. I wanted to run it through. So, Babu, we will be taking the money in 4 tranches. So, supposingly you have committed 1 crore rupees, 20 lakh rupees will come in the April of 2024. And then next 30% will be coming in April of 2025. Next 20% will be coming in April of 2026. And next 30% will be coming in April of 2027, which makes it 36 months of drawdown.
Okay.
As a fund, we will be taking money because we'll not be investing entire capital today. We wanted to invest in a spread of almost about 40, as I'm saying, deployment. Deployment will happen in 48 months. So that's how we wanted to take the capital. So level 2 is a deployment, where from April onwards, we'll be started scouting on the companies. Few companies will be start writing, and then eventually we will be building little larger checks in the 2nd year, 3rd year, and by 4th year we will completely invest our capital. We will not invest anything beyond 48 months, and from 45th month, practically speaking, those companies where we have invested between 1st month to 6 months, there'll be a sign of exit or next round or secondary or something. So that's how it happens. So from 45th month to 84 month in the 7 years, practically we'll be getting all the exits also.
Got it. Okay. Thank you. That helps.
Thank you. Yeah. Prasanna, I think, wanted to ask something.
Yeah, allowing Prasanna to unmute.
Hi, Gaurav. Good afternoon. Thanks for the presentation. Right. So as you presented, you mentioned about mentorship in the value proposition, actually. So can you little elaborate, like what type of mentorship you actually mean by that? Yeah. Thanks.
Yes. So thank you for asking this. And because We Founder Circle is a organization which is built on a foundation of a community. What we did, we went to across India cities, and their business angels are available. Somebody is doing a very large business So I wanted to take one example, and with that example, I wanted to explain how we mentor people. So one company which we have invested in a Bangalore-based company from our founder circle is Uban Electrical. And in that company, when we were identifying, myself and Neeraj went to Bangalore. That time Neeraj was staying in Delhi, and we went there and we were there 3 days. One of our community member was from Jaipur, and they run a very large automobile dealership. And he came to Bangalore, and he was with us. He drove, we all drove the vehicle, and he was knowing the nuances of the two-wheeler market, because he comes from that background. And same, we have got one who's the largest dealers of Gujarat. They also validated that yes, this company Uban, whatever they are doing is good, and we can write the check. So at the level of identifying companies also, we took the help of that. Next, when we started raising capital for them, almost about 12 crore rupees we raised for them, $1.5 million we raised for them. The first 3 checks come from the largest dealers of India. The 50 lakh rupees have been given by Siddharth Shah, which was basically Rajesh Motor, and then the Gujarat based the dealer who was there, and the Maharashtra based dealer. They 3 wrote the first checks. Why we did so? Because we were knowing that as an innovator, as an inventor, they can create a very good EV, two-wheeler or a motorbike. But eventually, when they have to go to market, they need a dealers, because in Indian market, you can't just make a product and can go to market. You need a ground zero connections and the dealers and distributor. There we have done that. That was the level 2 when we were raising capital. At the first level, we brought them so that they have the skin in the game and they become the stakeholders of the company. Level 3, when they start, senior person of these 2 dealerships, Gujarat and Rajasthan, went there, stayed 2-3 days in the plant of our startup, and mentored them and told them, they'd given them the feedback that you should not have this, seat height should not be this, and blah, blah, whatever intelligence they had, market intelligence they had, they shared that. So all the stages, we use community for different purposes. And the same way we use, intelligence of our investors for mentoring purposes. So supposing, Pansanna, you come from a background where you have a great understanding of maybe insurtech. So insurance, you come from, I don't know about it, just giving an example. So supposingly one of my company, Healthy Shore, is building. And there, if you can mentor them, if you can help them in how can they spread themselves, because they are in a corporate insurance, they normally do insurances for the employees and other things, and they are into that space. So that kind of a mentoring. And almost in our 125 companies, 40 companies are such where people have written the check also, and then eventually they are doing the mentoring also.
I understand. So mentoring, so as we see, any startup would have different domains of mentoring. Like some would need a financial mentoring, some would need a strategy mentoring, some would need a sales mentoring, right? So, okay. So what is your ratio of this mentor community vis-a-vis the entire startup portfolio that you have?
So I tell you very frankly, out of this 12,000 people, there'll be almost about active investors are 2,000. And out of this 2,000, practically 1,500 people are dormant or a financial investors. They don't want to bring in, but 500 people are such, those who are C-level executives, senior people, or they are very large entrepreneurs, and they are equally excited of mentoring also. And they come from, as you very correctly said, they come from a varied sectors. Somebody is from fintech, somebody is from food tech, somebody is from AI, somebody is from space tech, somebody has some other knowledge and domain. So out of that pool, somebody, when we pitch the deal and when we open that deal, they only come forward and say, boss, I'm more than happy to, even I will write not a very large check, I'll write a small check, but I will be like to mentor this company, And same time, when we will be going for fund now, fortunately, in last 3 years, we got all the data available. From the fund also, we will be going with that, and we'll be reaching out to our right set of mentors for everything, and eventually the LPs will also get the opportunity, because we'll be reaching out to LPs that this is the company which is coming. If any one of you would like to do a mentoring, or anybody would like to have something in that, because mentoring is certainly the founder has to agree, the portfolio founder has to agree that, yes, I am looking for a mentoring from X, Y, Z, so that's the kind of thing. So we provide that opportunity.
So for the lack of time, thanks, Gaurav, for nicely articulating what I wanted to know. See, I am keen on mentoring deep techs, because deep techs are in different types of longer gestation period is really killing them in conversions, right? So yeah, I'll connect with you maybe offline after this meeting, right? So maybe I can.
Anytime. Rohan is the right person to be connecting us, and we can very well talk after.
Sure, sir. Thanks.
So by the way,
Thanks for the clarification.
yeah, thanks. So before we take more questions, I've also circulated in the chat the intent form, where apart from your intent, you can also add questions, if any, to the founders, which you might come across, say, by end of day or tomorrow as well, or maybe after watching the recording if you joined late. So yeah, we'll be circulating the recording as well. But yeah, we'll take up more questions now.
Please.
So I think no one else has raised their hands, but we have a bunch of questions in the chat. I think Vikas has already been answering some of them, but we'll go over some of them.
Please ask any questions.
So
I think I will take the last question first. Arun, what is the worst case scenario regarding investment? Certainly, Arun, this is a high risk asset class. Theoretically, the entire capital can go, but practically it can never happen. Why? Because when I said that 24% capital will only go in the early stage or a first stage startups, 76% capital will go only on the follow-on rounds. Follow-on round means, so supposingly I have invested at 10 crore and some companies raising at a 25 crore valuation, where somebody else is also coming as an investor. There, supposingly the round is of 2 crore rupees, Avinya will write only 50 lakh rupees. So 1.5 crore rupees have come from somebody else. So that's the kind of scenario. So it will build up. So certainly we do not see any challenge in getting the capital as well as an IRR there. And just to tell you, as a founder, as a founder of Avinya Ventures or a fund manager, I will be giving complete 7 years of my life for this. If you will not be making money, practically speaking, as a fund manager, will not be getting anything. And I am putting my own 5 crore rupees in the fund. So I can assure you one thing, that we'll put 100% of our effort. And fortunately, last 7-8 years, what we have seen the entire cycle, we know how does this cycle play and what are the things and other things. So just wanted to tell you.
Cool. Thanks, Gaurav, for answering. So we'll start from the top questions who asked first. So Vinod's question was, what's the minimum investment and how many LPs will be part of this fund? So I'll take the first part and then Gaurav, you can add. So minimum investment as an LP is 1 crore over 4 years. It's exactly over 36 months now, since the first tranche is starting March this year. And yeah, minimum investment as an LP is 1 crore, and via the LLP is 20 lakhs over 4 years, which we are doing exclusively for our syndicate. How many LPs? I think Gaurav, you will be the better person to answer.
No, so how many LPs is not a right question, because I think 500 up till now, we have got close to 230 to 40 crores of capital raise, and we are close to 100 such 70 or 80 LPs are there. So practically speaking, in the fund of 500, I don't see more than 200 LPs coming in.
Got it. Next question is by Kiran. Considering the current and future market trend, what is the expected returns, as mutual funds itself are giving 30% plus?
So this is a different asset class. I don't want to compare it with that. And whatever we are seeing today in the equity market will never sustain like that, because no asset class sustains like this. Certainly today the equity market looks very, very good. Now, but when I'm talking of a 7 years, I can tell you that VCs or early stage fund will be doing much better than today's equity market. That I can very well tell you. So we are quite hopeful that we will exceed mutual funds and other equity funds.
Got it. I think Prashant's question was similar. Small cap is generated 28%. So I think we covered that as part of this. Kiran has said, do we get to see which are the companies our investments have been made in?
Yeah, certainly you will be. In a quarterly report, you will get everything. In the quarterly report, you will get everything, where we have invested, how much capital has been returned. If we have done any follow-on round, you will get to know. If they have done any follow-on round, you will get to know. If there is any material development, positive or negative, you will come to know. Everything you will come.
Got it. There's been a question that, could you repeat what hurdle rate is, by Prashant?
Yeah, so hurdle rate is 12%. That means that till 12% of IRR, we will not, as a fund manager, charge any carry to you. That means that supposingly you have given me today 100 rupees, till 221 rupees after 7 years, because when I'm talking of a IRR and compounding interest of 12%, that means the simple interest becomes 12 years, 12%, 7 years is 84%. But when it is compounding, it is 121 rupees. So as a hurdle of 12%, till then you will get your money back, and then only as a fund manager, if the fund makes 222 rupees, then only fund manager gets the money. That's what I'm saying.
Got it. Shivam's question is, what would be the first closing amount?
So basically 20% is the capital which we are asking for.
Got it. So like I shared already, I think it's 20, 30, 20, 30% each over the next 36 months.
Yes. So practically speaking, if somebody is writing, just to tell you, Rohan, if somebody is writing 1 crore also now, so he's actually investing anything between 2 lakh to 2 lakh 50,000 rupees a month only, in early stage.
Got it. Prashant's next question is, your company also investing in pre-IPO as an anchor investor in SME companies?
No. This fund is not allowed to do so.
Yeah, this is an early stage fund. Prashant, I think, yeah, would request you to watch the recording again. Krishna's question is it related or different from AIF fund, which requires minimum 25 lakhs over 5 years? It's completely different, Krishna. That is AIF fund. This is a VC fund, which is, independent of the other fund which is more of a syndicate AIF which you are participating.
Yeah, I can add there's Angel Fund and there's a AIF fund. Angel Fund has a limitation of 25 lakh, which we have been doing via Invest and so on. AIF Fund has a separate limitation of 1 CR minimum for Indian investors, which is obviously across 36 months, just to add a note.
Sure. Thanks, Vikas. Next, I don't know if it's feasible, but Jay is asking, can we get some Excel sheet of previous investments and exits to get a better view on this? I think we covered overall like companies which gave up to 80x returns, including Bharat Pay. But I don't know if we have.
Rohan, every data of mine is available, but I think that can only be because that's a confidential information. I can discuss with you. I can show you on a screen, and if somebody is very much interested and if he's writing a good amount of check, I'm open to even share all of the detail. Everything is available with us. Every detail is available.
Got it. Arun is asking, is there sector specific investment?
No, we are a sector agnostic fund. We will be investing out of 10 sectors, and primarily AI, agri-tech, AR/VR, clean tech, consumer tech, fintech, healthcare, and SaaS is primarily going to be our target.
Cool. We have 2 more questions in the chat, then we'll move on to 2 folks who have raised their hand as well. Just give us 2 minutes. So Shubham Deep is saying, when we talk about an exit from 4th or 5th year onwards, will it be with the returns or it will be just the principal? If it is with returns, and if anyone wants to stay invested, then what will be the scenario?
No. So it's not one is this is an AIF fund. If I will distribute the capital, everybody will get the capital. It is not that somebody can say that I don't want it capital. That doesn't happen. And first your principal is going to be coming. Once you complete your principal, the whatever money is going to be coming as a return. So when we are returning the money, there's no tag to that. But practically speaking, if I have taken 1 crore rupees from you, and if I'm giving you 20 lakh rupees, that means that the principal is coming. Until 1 crore rupees is coming, it's a principal, and then after 1 crore is covered, then whatever you are getting is a IRR. So, and when I'm saying 45, I wanted to be mindful of that in first 3 years, we have got 1 company, 2 company, or 3 companies which has done exceptionally good, and there we have a possibility of an exit. That's what. But normally it takes 4 years to 5 years to get a right sense of exit.
Sure, makes sense. Last question in the chat is from Arun. What are the other charges like management fee and performance fees?
No. So there are the model is very simple. It's a 220 model. 2% is the management fees and 20% is the carry. But I wanted to tell you one very interesting thing. In a waterfall, if I'm taking 100 rupees from you, because we'll not be charging any charges separately to you, it will be part of the 100 rupees only. So in the waterfall, first I will return you 100 rupees, then I will return you your 12% hurdle, which is 121 rupees, and then only distribution will happen. So supposingly as a fund, we have taken 2 rupees and we have deducted 10% or 12% as a management fees. First we have to earn that back as a capital. We have to put an interest over that, and that also we have to return, and then only as a fund manager I can get. So waterfall is very clearly explained in our fund. First we will be returning you the entire capital along with the charges which you have paid, and then we will be returning you the IRR, and then as a fund manager I can have a carry of money.
Yeah, so just to add up, fees is a part of the money that you are investing, just to keep it as simple.
Cool. I think a couple of more folks, Veera and Shubham, had also asked about this. So the details are on this page, guys, and I think Gaurav and Vikas just covered it in detail. Krishna is saying, can you please elaborate on our group specific offer of 20 lakh minimum via LLP, how the LLP will be formed? So Avinya has their own LLP already, Krishna, and you will be added as one of the folks in the LLP, and your investments will also be in the ratio 20%, 30, 20, 30 over the next 36 months, which means 4 lakh this month, 6 lakh in March next year, and in March 26 and 27, 4 lakh and 6 lakh again, respectively. That will be the ratio of that. We'll take up one last question in the chat before we move on to folks who have raised their hand. Ganesh, if startups want to showcase their startup, and what's the procedure and requirements for early stage, idea stage startups to raise funds from you? Ganesh, I'll take that. So basically, you can reach out to me, and I will connect you to the team, which includes Vikas, Gaurav, Rohit. We can definitely evaluate the idea first, because like it's a crowded space and only top 2% startups or ideas are actually considered for investment. So yeah, you feel free, if you're talking about your own venture, feel free to share, or if you have a recommendation also, feel free to let us know and we'll get back to you. Abhishek is saying, how can someone be part of the Angel Network WFC? So WFC's Angel Network is on the Invest platform, Abhishek. I think if you are part of my syndicate, there's a Discover Syndicates option, and you can see WeFounder Circle Syndicate as well there. We do a lot of common deals as well, and WFC do some of their own separate deals. I do some of my own separate deals as well. But yeah, you can explore it on the Invest platform. Cool. I think Baswaraj had raised his hand, allowing you to unmute, Baswaraj, if you want to.
Thank you, Rohan. Baswaraj from Bangalore. I think you answered the query, which was asked by another friend. Okay. The query was, okay, if there is any deep technology or robotics and AI-based organization who is looking for a funding requirement, how do we connect them with this team? So I think you have answered that query.
Yeah. Just to reiterate, Baswaraj, any of the company, we are more than happy. We need a large pool of startups. So just keep referring to us. Obviously, any investment will happen based on the whole curation process, because at the end of the day, the goal is ROI. So happy to take any leads that you can pass on, be your own startup or any reference. Thank you.
Thank you so much, Vikas. I'll be happy to connect. Yeah.
Cool. So guess we've answered majority of the questions. I've shared the intent form once again in the chat a couple of minutes back. And yeah, if any of you have any final question. Okay, Krishna has raised his hand. Krishna, allowing you to unmute.
Hi everyone. Hi Rohan and WFC team. Thanks for the wonderful session. With respect to the support you are planning to give to the startups, right? I have a thought. Whenever we are dealing with any of the companies these days with respect to AI and ML, a lot of cost would be on the infrastructure. By infrastructure, what I mean to say is the infrastructure on the cloud or to run their algorithms and AI ML models. So are you planning to do any tie-up with any of the big cloud providers like AWS or GCP or Microsoft, so that whenever you decide to support someone, it need not to be in the form of money from our side, right? If you have a partnership with these cloud providers, they can give some like $1,000 or $5,000. I know it is very less, but I have seen scenarios where my own friend startup, they got the 1 year infrastructure supported by AWS. So if we have these partnerships, I think that will make things easier as a startup and also for us as a potential investor. I just wanted to check if you have any
Yes,
context.
sir, just to answer, we already have a tie-up with AWS for 5 to 10,000 credit that we enable to all the startup, not just limited to Avinya or WeFounder Circle, but it goes across EvolveX or even Zones, any of the companies. So yes, we have tie-up, not just AWS, we have with HubSpot, we have with multiple partners all across almost $200,000 worth of credits are available. The only challenge I see is early stage companies are not very adept to use technology. Yes, they keep taking as the time happens, but yes, we have a type already in place.
Thank you. Thanks for confirming. That really helps. Thanks
you,
for the
Keshav.
wonderful presentation on the details. This is the first time I'm able to hear something such big. Rohan has been arranging so many sessions with the startup, but this is even bigger than that. Thank you, Rohan.
We really appreciate you liking it. So, just to add my 2 cents, Ron, I'm not too sure if there are any questions. These are two people keep asking with respect to equity or mutual fund or this asset class. First, let's understand these are all different asset class. My own belief is to diversify across. So there are different asset class, which there's a property, there's a gold, there's a listed, there's unlisted. So this being one of those. Within unlisted, there's angel where you decide the money, you decide the startup, versus a VC, which is like a mutual fund where the fund manager does that. And thankfully, Gaurav himself is the fund manager. He's also co-founder with 25-year experience. And that's what we want to leverage via this particular asset class. And that's the opportunity that Rohan wished to present out to a larger community. So just adding 2 cents out of the way. Yeah, Arun, Divya, if you can unmute Arun, he has some questions.
Yeah, allowing Arun to unmute. Arun,
Yeah, so hi, I'm part of WSFC. So we get a lot of deals where we invest in that. So I just wanted to know, like in this fund, will the whatever similar startups be, coming into WFC Invest platform also, or is this separate and
So
the Avinya fund is separate?
Yeah. Thank you, Arun, for asking this. So we are very clear that every deal funnel is different. EvolveX has their set of, curation. WeFounder Circle has their set of curation, and that the team is also different. Avinya has very different. Now, because friends, we have to understand that in angel investing, you may choose companies with a different perspective of a companies which are slightly, mature. Whereas here, the idea is to identify companies very, very early on, very, very early on. So it's going to be a totally different curation. Similar deals, maybe in 1 or 2 exception can be there, but not more than that.
Yeah, thank you. Thank you so much.
Cool. Think we have answered all the questions quickly. One final call if anyone has any questions they want to ask either in the chat or unmute and ask. Please let us know and we'll get it clarified.
So if you can, Rohan, check the intent form also, that how many people have, if you can again request to people to,
Yeah, we have had 7-8 folks already fill the form. I think anyway, we will be circulating it along with the recording as well. But yeah, I will share it one final time again in the chat.
Hey, Rohan, can I just ask a question?
Yeah, please go ahead, Sajeev.
Yeah, just very quickly. I think most of the questions that I had, everyone else asked. So thank you for all that and good presentation. So for NRIs investing into this, like who are citizens outside of India, in countries like US, are there any special requirements, anything to be aware of, any prerequisites?
No, absolutely nothing. We have a gift feeder fund, which allows very simply anywhere from any part of the world, people can put the money in that. And then eventually that money will come in Avinya. But just to tell you, the hurdle rate, which is 12%, in case of dollar investment, it will be 9%, because we'll have to adjust the the currency appreciation also. So practically speaking, it's a 9% in hurdle in case of investment which is coming in the dollar, and in 12% in the case of money in the Indian rupee. And the money can come seamless through our Gift City feeder fund. So there is no problem. There is no special requirement.
Got it. Thank you.
Cool. I think with that, we've answered all the questions that were there. So first of all, I would like to thank Gaurav, Vikas, Rohit, and Divya from the Avinya team to take time out and explain the product in detail to all of us. And yeah, thank you all of you investors for taking time out on a Sunday to join and learn more about this. So yeah, we are recording the session. We'll be sharing the recording as well along with the intent form. And if you have any more questions as well, feel free to either ask it in the form or reach out to me directly and I will get it clarified. Cool. Thank you so much, everyone.